Welcome back. You're watching Stock Watch this week, and joining me to unpack your stock-related questions this afternoon is McCurrie from FNB Wealth and Investments. Be sure to send your questions via email to stockwatch@bdtv.co.za or via SMS on 41392 or on X at Business Day TV using the hashtag StockWatch. Thank you so much for your time, Wayne. Really eye-watering gains that we saw on the JSE this week. And actually even coming through further into the rand today, as we're seeing it dipping further away from 18 rand against the US dollar. As much as the JSE hasn't really extended those gains too much, but is it encouraging what's happening to the rand today?
Yes, it's very, very encouraging. Of course, we've got to differentiate as to why the rand is strengthening and what the trigger event was. The reason why the rand was strengthening, it was totally oversold. It was extremely cheap and was just waiting for something of good news to come along to trigger strengthening. And that's what happened with the GNU and everything. So that's not the reason why the rand's stronger. That's just the reason why it's done all of this in the last week and a bit. Same with the all-share index. Our SA shares, the banks, the retailers, etc., were exceptionally cheap. And it also just needed a little bit of good news to trigger the movement up. Now, as you correctly said, it's given a little bit of that back, but not much. And this morning, I mean, the market was flat. And yet in the last 20 minutes, half an hour, it's actually up 0.4%, almost 0.5%, which is, of course, good news.
Yeah. So would you say that this is, this pullback that we're seeing is still under an umbrella of positive investor sentiment, not that anything has changed?
Yeah, look, there's a very small pullback. I mean, when you get a 3-4% day, the next day is normally a weekday because it is so unusual to have that strong a day. I mean, you had big shares going up 10% in one day. It's highly, highly unusual. I mean, literally only see that once every 5 or 10 years you get a day like that.
Yeah.
So a little bit of pullback would not be unusual at all. Now, what's going to happen into the future? Well, of course, no one knows, but my guess is as long as the US inflation numbers stay okay, in other words, that the estimate will be that the US will cut interest rates before the end of the year, I think this rally can continue, almost irrespective of what happens in South Africa, and I'll come back to that.
Yeah.
So if the next month inflation data looks good out of the US and the market starts thinking there's a rate cut coming up soon, we will see this continue, and then we should actually see the mining shares run. Or even though they have gone up, they haven't run yet. So that's still the one sector of our market that's waiting for more positive news. I mean, politics, we all know politicians, and especially this is a GNU, and I know we've had a GNU before, but the GNU before, we all knew who was in charge there, whereas now, the ANC is down at 40%, and no one's worked in a government of national unity, so we are going to get bad news days. We're going to get them for sure.
Yeah.
But as long as the US inflation number stays okay, I think we'll be all right. And of course, in the UK, inflation is back down to 2%, so they're cutting rates probably before the election, and it's every likelihood that the European Central Bank will also cut rates. So maybe we now, at long last, are going into the rate cutting cycle, which is extremely good for our market, good for mining shares, and also very good for the rand.
It's been also interesting, Wayne, as we're talking about the retailers. I think they've all had not necessarily different reactions, but a different momentum in terms of participating in the rally. We've had, obviously, TFG, Mr. Price, really rallying there. I think Truworths as well. But, well, yeah, fashion retailers. Pepkor, not really shooting the lights out, just like everybody else. I mean, what is that story telling? Is it a story of, maybe there's, questionable fundamentals, or maybe a question on momentum in terms of the earnings that we could see on Pepkor? What is it?
Well, look, the last set of Pepkor results were okay. They weren't great, but they weren't terrible. They sort of met market expectations more or less. I think it's all to do with the rating of the shares. The companies that really ran hard, the ones you mentioned, and SPAR, were just beaten down more by the market than Pepkor was. So therefore, they had I suppose, more of a gap to go up. So I don't think it's a reflection on Pepco at all.
All right. I hear you on that. Wayne, there is a question on transaction capital.
Yes.
Transaction capital, yeah, your take on what it will be in about 5 years. Can your crystal ball tell us that?
Yeah, we all know the history on transaction capital, and we all know this was a go-go company. And it was a good business, and then all of a sudden the wheels fell off. And then I think the wheels fell off 3 times. Because when the first bit of bad news came out, we all thought that's the end. Then another bit of bad news came out, and then another bit of bad news came out. But SA Taxi is the problem. They seem to have enough capital to sort that business out by selling WeBuy cars and a few other things, but mainly WeBuy cars. Now, the taxi environment is very difficult at the moment. People's disposable incomes are under pressure. Interest rates are high. Petrol price, even though it's just come off a little bit, is still high. Where the share will be in 5 years' time is all dependent on what your view is essentially of the South African economy, and obviously then what's going to happen to the commodity cycle, because we are so dependent on the commodity cycle. Yeah. So if there's a good commodity cycle, rand will strengthen, the price of petrol won't really go up too much in rands, if at all, might even fall. But more importantly, interest rates will come down, the economy will grow, there'll be more disposable incomes, and that should be good for the taxi industry. So that's my view. So in other words, I think the share price of transaction capital will be a lot higher in 3 to 4 years' time. But if I'm wrong, then, you know, the share price won't be higher, it'll be lower. In fact, might even go bankrupt. And just having said that, understand this is a very volatile company with huge risks. So anyone who wants to buy it, don't put all of your money into it. Treat it almost as option money. In other words, to say, I can lose this money. I can maybe make a fantastic return, but I can also afford to lose this money because there's high risks attached to the company.
Not for widows and orphans. Another company in which investors did lose a lot of money at some point is EOH, assuming that the viewer is into these turnaround stories. Also asking, where will it be in 5 years? EOH has actually, I'm looking at the graph now, since May has also been on quite a rally, but obviously not what we had seen in the past. And I guess the question has always been, will it go back to levels of around even 4 or 5 rand?
Look, it's not going back to past levels. Those levels were artificially, essentially false levels. I mean, they were artificial.
Yeah.
Because EOH had this funny business strategy of, I've got expensive shares, so therefore I'm going to use my expensive shares to buy cheap businesses with earnings to boost my own earnings. Now, the moment your share price collapses and you can't use your shares anymore to buy cheap earnings, you've got no earnings. And then compound that. I mean, plenty of companies have done that in the past, plenty, but then compound that with all the underhand and the bribery and the corruption and all the things we know about EOH, you know, compounds that problem enormously. I mean, I could be so wrong, I don't know. The turnaround by Stephen van Coller, I think, was a terrible job, an onerous job, and I think he did a very good job in turning it around.
Yeah.
But this is an intensely competitive business. You know, SA Taxis, there's no one else in that game. In financial services and IT and all of this, there's huge competition. So I wouldn't be so bullish. I mean, I think the worst is over, but I wouldn't be so bullish on EOH.
What about Nampak, Wayne? Because I know a lot of the vet analysts stay away from it because obviously of, you know, its fall from glory. But we did see quite good momentum on the share price. I think yesterday it was up more than 23%. What did you make of this one?
Well, first of all, I'm old enough to remember when Nampak was a blue chip company in the 90s. It was the bluest of blue chip. It was a fantastic company. Then somehow they lost their way totally. And it was all to do with imports. They couldn't, you know, they just couldn't compete against overseas imports. And it seems strange that when you import packaging, you're importing fresh air, you know, so, and they still couldn't compete against it. And it's virtually a penny stock. I mean, you can't actually believe it's fall from grace. I would stay away. Yeah, I know they've restructured the business. I know they've sold off many units in the business, but maybe treat it as option money again if you want to go into it. You know, the share price can double and it can halve again.
Yeah.
I would be a bit cautious about Nampak.
Well, Wayne, if I remember correctly, there's one stock that you were not cautious about, even when there was a tax matter that they were dealing with and a reduction in their bottom line. That was Coronation Fund Managers, and they actually came out today saying that the Constitutional Court has ruled in favor of the company. We have seen that share price jumping 5%. Of course, this is what you expected?
Well, I don't know if I expected it, but I hoped so.
Yeah.
I mean, Coronation, I've known Coronation since I've been working in asset management. This is an exceptionally good company over the longer term. They've proven themselves over decades as good asset managers. Of course, every asset manager, ask me, goes through a period of bad performance and then a period of good performance. But their underlying business is truly a sound business, and it's been around forever, essentially.
Yeah.
So the tax thing came up. The tax cost them 6 months of earnings and 6 months of dividends. Now there's no one else SARS can appeal to. This is the Constitutional Court. There's nothing else that SARS can do other than allow the deductions and pay back the penalty with interest, which means there'll probably be a special dividend coming out of Coronation because of this capital influx. And even with the share price rise today, it still, I think, represents long-term value. Understand it is an asset manager. It's dependent on what the market does. It's dependent on how their performance goes. So it's a very volatile earnings profile. So once again, don't put all of your money into it. But at this price, I think you can put a little bit of money into it now that this matter is now behind you.
All right. Wayne, the viewer says, I heard Wayne is adding to his platinum holding. Which and why?
Look, I'm still bullish. I've been wrong on this one. I'll be right. I'll admit straight up front. And I'm wrong for the same reason I'm wrong every time, is I buy too early. If the commodity cycle turns, these platinum shares are going to shoot the lights out. They can be extremely good performers. Now, I started recommending Amplats at about 950. You know, it touches below 600. So you feel a bit stupid. But if I'm right in the commodity cycle, I would be buying and am buying a little bit more now because the upside is actually quite material from these levels. It's a typical cycle. These shares did exactly the same in 2015, and they rallied sharply. They did exactly the same in 2002, and they rallied sharply. But when you're at the bottom of the cycle, waiting for the turn, waiting for something to happen, and the share price just keeps falling, you start to lose a little bit of heart. You know, you start to think, will the cycle happen? Am I wrong, etc., etc. So yes, I would still buy platinum shares. But there's one thing, let's just assume that I'm right on these platinum shares, and the share price does go up. Don't forget to sell, because that's the biggest mistake people make, actually. When the platinum shares run, all you're going to hear is good news. It's just going to be a wonderful. Yeah. And that's exactly the time you should actually be selling.
Interesting. And it's also interesting that you say you'd be going for Amplats. Do you not see the...
Yeah, Sibanye is too marginal. Yeah. In other words, they bought the mines no one else wanted. And remember, that share price did phenomenally well when we had a bit of an upcycle. I mean, this was one of the darlings of the stock market. And it's given it all back and more, because that's the nature of a commodity company. So Sibanye and Implats, I think, are a little bit more, well, they're not, they are more marginal than Amplats. Amplats has the best platinum mine in the world. But maybe I'm being too conservative. Maybe if I'm bullish on the platinum cycle, I should buy the marginal ones, because they're the ones that run the most, if I'm right. But I just like Amplats. I like their mine. I like quality of the asset and the ore base.
Well, do you not think that the unbundling from Anglo is going to create any sort of disruption? Because also the question has been, if you're going to go for Amplats, do you dip into it now or after the unbundling?
I don't think it makes much difference because it's known. The unbundling is known. So I think the moment it unbundled, I don't think is going to be a big share price change. There was a little bit of almost fake news around Amplats, is that when Anglo-American unbundles Amplats, all the index tracking funds are going to sell Amplats because it's not in the index. That's wrong. The moment Anglo-American unbundles Amplats, it joins the index. So there's going to be no forced selling of Amplats. I mean, Amplats is 80% owned by Anglo-American. So at the moment, only 20% of Amplats is in the index. You know, when Anglo's unbundles, 100% of Amplats will be in the index. And of course, you know, we'll see what Anglo's does.
Okay.
Because I still think Anglo's was forced into this because of the BHP bid. And you never know, the Anglo-American share price could be 1,000 before the end of the year. I don't know, I'm guessing, but it could be. No, it's not impossible. It was 1,000 in December last year on a little bit of good news. And then Anglos will say, oh, hang on a second, maybe we shouldn't unbundle this. I mean, companies are entitled to change their mind if circumstances change. So we'll actually see what happens.
Okay. All right. Well, Wayne, let's get to your stock pick for today. What are you picking?
I'm picking Sasol, same as I did on Wednesday, for exactly these reasons. You should see a commodity upcycle, and the big swing, there's two big swing factors in Sasol. One was the uncertainty around South Africa, and hopefully with the GNU around, that uncertainty has subsided a little bit. But the other biggest one by far was world chemical prices. They have started to tick up. And once again, if we get a commodity upcycle, they should do well, and Sasol will be a huge beneficiary of that. I mean, this share price is very, very bombed out.
All right. Well, thank you so much for your time and for your analysis today, Wayne. Much appreciated. That was FNB Wealth and Investments' Wayne McCurrie.